afternoon, but basically range bound for the most part. Let's give you our levels. Our pivot this morning is 42.33. Resistance above at 41, 48, 55, and 65, and support at 24, 18, 11, and 04. Pivot 33, support 24, 18, 11, 04. Resistance on the upside of 41, 48, 55, and 65. All right. Well, welcome some of the new folks that are here. We are trading mini S&Ps. We give you our levels here as a guide to the day. Those are support and resistance levels, which we can tweak as the day goes on. 24, 18, 11, and 04. And so we can tweak those as the day goes on. They're just a guide to our trading day to keep us focused on opportunity or trying to find opportunity. We use these levels as one factor, and another factor is the opportunity of price action. And between those two combinations, we try to find our setups for the day. We are scalping the market, so we're keeping our stops in place. The way it's going lately, 2 to 3 points looks like a viable number, and if we can get into a trade and a nice opportunity, and if you can trade multiple contracts, you definitely can take more than 2 or 3 points on some of your contracts left over. So we are scalping the market, and we know that Martin, that there's nothing etched in stone here. Levels get run over sometimes, and price action outplays don't always play out the way they're supposed to. But we stay focused and always look for the next opportunity. So we are scalping to take 2 or 3 points on our trades here. So each point is about $50 on each contract. So that gives us enough spillage if we're wrong. Sometimes we have backup areas behind them, so we stay focused and try to keep those opportunities in place. We average about 4 to 5 trades in the course of a day. That's at least what we're trying to get. Obviously, when the markets are slow and not much is going on, that is an average. That's why it's an average, 4 to 5 trades the course of a morning. We focus more on the morning hours here because we feel that there's good ebbs and flows in the morning. The trade in the afternoon gets a little bit more one-sided, a little bit less of, there's not as much volatility in there sometimes, and so we focus more on the morning hours as the opportunity there presents itself and stays with our methodology a little bit better than it does as the day goes on. It gets, like I said, the trade, less people are trading, gets a little bit more stickier and doesn't hold as well as you would think sometimes, not all the time. But so that's why we focus more on the morning hours. And like I said, we are looking to get on average about 4 to 5 trades in the course of a day. Because the markets are kind of tight like they are now, and the VIX is probably about a 16 handle or 17 handle. We tend to take that into account and understand that we might get opportunity, we might not. Who knows? We don't know. Yesterday we had a few good trades early on. Well, we had trades early on, and we had to make sure we got in and out of our trades quickly. Can we repeat the levels in the chat again, in case some of you have missed it or come a little late? Those are the levels, like I said, we use as a guide to the day, and we again, they're not there for to be etched in stone. We can tweak them as the day goes on, depending on the price movement and price action. So if anybody has any questions, you can see I use the chat box to be able to see your questions or see your comments and put them in the chat box area, and I'll be able to get back to you quicker instead of putting it in the Q&A section. Sometimes I don't see that. I don't have that window up, and I won't probably see it as quick. So the market is up here at the highs. You can see here with the bond market is up at a 159 handle, which is very, very solid. We were in the 156 handle in the SEP, and so in the June, so we're in the SEP here, and we're trading up here at the one. So it puts us well into the 160 handle. If we were trading the June, so that is getting us all the way back from that big break that the market has been concerned with in regards to inflation, but it's not happening. So at least the bond market is telling us something is under control a little bit. They're accepting it more. The yield on the 10-year is down to 1.5, which again is another solid sign that the bond market is kind of shrugging off any inflation or any raise in interest rates anytime soon. That was not the case just about a month ago when there was the rage, and it still is the rage. If the market's going to go down, it'll be talk about inflation. There will be, I should say, the CPI number tomorrow that will be released at 7:30 before we open up. But today we've got wholesale inventories coming out here at 9 o'clock, kind of a smaller number, but you never know. And then at noon Chicago time, there is a 10-year note auction of $38 billion, which could affect equities, depending on how badly they, depending on the ratios that they come up with. But we only look at that recently because of the fact that the market is looking at interest rates and what effect it has on price in the equities. So just to throw that out there, you know, depending on demand, how those auctions go. So that's later on at 12 o'clock Chicago time. Again, we don't usually have to watch it as far as our trading is concerned, but you never know. So we do have a little number coming out here at 9, top of the hour, and then we'll see what happens from there. The market, as you can see here, has been a very tight range for most of the overnight trade. Yesterday's hiccup was due to the fact that there was a global internet issue that was resolved pretty quickly, and you had that little hiccup early on, and then you had another little push to the downside. As you can see, late in the afternoon, but as you can see, they brought it right back up. So not to worry, right? All right. So again, if anybody has any questions, feel free to ask them in the chat box area. That's where we're looking to find out questions as we're coming up here and hanging around our pivot area. Kind of going nowhere fast. We did bounce off of our blue band just a little bit. But we're in a tight little range, and patience is very important when we are considering trading, and especially since we are these days when the markets are in a tight little range like they have been. So we give you our levels. Again, if you look at the chat box area, we're going to repeat the levels for those of you who might have missed them. And those are a guide to the day. If you look at bring up your chat box, you'll find them. And those are a guide to the day to kind of guide us. They're not, we can tweak those as the day goes on. Nothing here is anything, permanent. The tweaking becomes a part of the game because of the price action. Sometimes, let's say we have a level that gets down there where we miss it by a little bit. Sometimes you have to adjust that. Sometimes some of our more risk-averse traders cancel that order completely, depending on how much risk you want to take. Some of you adjust your quantity, and others just leave it. Everybody's got different risk tolerances here, so I respect that, and I just kind of my job here is kind of warn you about risk involved, and you have to make the adjustments on your own. As far as an individual trader, we have an education course that teaches all of this stuff, the levels, price action opportunities, and the risks involved. And at the end of the day, the focus of the education course is for you to be able to do everything on your own, to make decisions on your own, informed decisions, and smart decisions, so that you can scalp the market independent of anybody else, namely myself. Right? That's what we're trying to do here. All right. So again, if anybody has any questions, feel free to ask. The market is in a tight little range, so nothing much for us to do. We have support down at 24. Might seem a little far away, but there's other little areas along the way. If you are a little bit more aggressive, maybe you take those. But like I said, my levels are there. We adjust them. If you get to the point where you understand how to get them, you can find them on your own and have your own in addition to mine. Definitely mine are not the end all of numbers. But so if you're an experienced trader, you can make adjustments. You add the concepts to your trading methodology, and between both of us, hopefully we can make a little bit of money. I mean, that's the alternative, right? At the end of the day, that's the goal more than anything else. All right, the market's slowly down ticking here a little bit. Support down at the 24 area. We could do is be a little bit patient. Did I know it was going to break? I didn't know it was going to break. That I didn't know. So nobody knows what the market's going to do. I mean, if they tell you they do, you got to wonder a little bit, especially when it's bouncing back and forth and going nowhere fast. All right, support down at 24. Again, if anybody has any questions, feel free to ask. Patience is important here as we wait for the opportunities to present themselves in the market. The tendency sometimes is to want to trade because you see the market, the numbers flickering in front of you, but we just would like to make money. So let's be patient and wait for the levels to kind of present themselves. Or if you have a good price action opportunity, and what we do in our education courses is that we actually give you reasons to trade, multiple reasons to trade. The more reasons that you have to trade, the more confidence you have in entering your positions. And that's what the goal here is, to make sure you get confident in your trade selection by making sure you have multiple reasons to get into trades and not. All right, well, we did take a little bit of a bounce there. And we had, if you look at our green bands coming in there at, what is that, 27-ish area, but we didn't get down there, got to 27 and change. Bounce back up here a little bit. Still support down at the 24, rotating back up here to our pivot area now. Again, kind of just market just slippery a little. Fed today? No. The Fed is, I think, is going to release its information next week. All there is today is the auction results, which will be released at noon Chicago time. That's if and the only reason that you even look at the auction these days is because of the talk about interest rates and inflation. If there's high demand for the auction, that even makes it better for bonds in regards to yields. As you can see what they're doing there in the bond market, they keep rallying it, so there are little concerns about uh, inflation is the talk anyway, should be dampened a little bit because of what's going on there in the bond market. But what do I know? As we rotate quickly here, almost back up here to the highs. Patience is important. We had 24, got down to 28, and then bouncing back up here a little bit. Again, patience, like I said, is an important tool that we have to have, and that's what you have to have. So we come back up here into the same range we were at all morning. And we're not looking to just trade for trade's sake. We're looking to find opportunities that give us a good opportunity to make some money. It's hard to trade this little range thing here, but if you were a little aggressive, depending on you could have made a case for a little support there at the 27, 28 area. If, again, that's if you were a little aggressive, and you probably would have had to take the 24 as well, but that's another story. Was there a case for it? I guess is what I'm trying to say. There probably was, but not everybody needed to take them. It's a lot more riskier. That trade was a little bit more riskier than any other opportunity you could have had. Or the 24, I should say. All right, we're just coming back up here. I'm not touching that. It's really trading on both sides of the pivot, so I have no really opinion up here. It could really go either way, right? It broke off the morning, and now it might rally off this, but sometimes you need a break to rally, right? You need people to get short, thinking the market is going down, and then the market reverses. So it's counterintuitive. So if you're looking for a rally, sometimes you need a break. But very tough to decipher what it wants to do here. But there's a little bit of selling here. Obviously, somebody hiccuped there a little bit, came in with some kind of big order, sold it off. So as you can see, it's trading both sides of our pivot, very guessing which way it goes from here. So patience is important. Somebody did have a little bit of a big order there, sold it off, came right back down and popped it right back up. Could you have known that? Absolutely. Well, if you did, then you didn't tell me. I'm pretty upset about that. If you knew that was going to happen, or if that was your order and didn't tell me. I would have shared that with you if I was going to do that. Anyway, we're just coming back up here to the highs here, the 35. Again, tough little trade, no doubt about it. So patience is important. They do that all the time, don't they? They got the people long up there, and then boom, sold it off really fast. You know, that's why you got to be patient and just stay out of it. Because if you're thinking they were going to bust it through, and then look what happened. Wish I could tell you it was going to happen. We just don't know those things are going to happen. Again, anybody has any questions, feel free to ask. We are trading mini S&Ps here, trying to take advantage of ebbs and flows of the market. And we can do that by our levels that we gave out this morning. If we could repeat the levels in the chat box area there, appreciate it, as we quickly come down here off of that rotation of the high there. Just kissed the 27. Support down at the 424 area. Again, if you're a little aggressive there and took the 27 against our green band, you are getting paid off here a little bit. And I mentioned it earlier. Again, everybody's aggressive. Everybody has different risk tolerances. So that's one of our opportunities. If you, like I said, if you were looking for something to trade, but we are still have our good supporters down at the 24 area. Bond just kind of hanging up there. They're not getting swayed by anything or anybody. Support down at 24 do we have. And again, whatever trade you take, make sure you keep your stops in place. If you did take the 27 trade here, you're getting a nice little rotation off of it. Had to be a little aggressive there to be able to take that one, obviously. talked about it a couple times, and then when it held. All right, we're just kind of just bouncing. The 25.75 is the settlement price, in case some of you were wondering. All right, kind of market pushing back up here. We'll see what it wants to do. We still have 24 as support and a little resistance if we're targeting anything. Maybe you're targeting the 33 area as a, well, 32 to 33 area would be a good exit if you got in there at 27. And remember, I said that the levels we give out are a guide, and we can tweak them according to price action. Right, and so kind of talked about the 27 area for a reason. Remember, any trade we put on, there's a reason for it. We just don't trade for sake of trading. There's we try to find multiple reasons to trade that gives us more opportunity and gives you more confidence. And the thing about trading is that we need to give you confidence in entering trades, and then that way you feel good about it. All right, nice rotation, nice trade there, Robert C. I think I've paid for your daughter's graduation party. Trust me on this one, their parties become more expensive as they get older. It's not like taking them to Chuck E. Cheese anymore. You're actually going to have to start paying for a bar bill. In a couple of years. Turns out that every time I take my kids out to dinner these days, it's like the bar bill. Well, I haven't done that in a while, but before my bar bill always was more expensive than than the food bill. She wants to go shopping. That's not, well, of course you got to take her shopping. I mean, that's a given. The question is, will she go shopping with you? That's the question. Of course. Well, that's good. I got lucky too that they all wanted to hang out with me. So you do know I have 5 girls, right? Yeah. So that's good. That's good that she wants to go shopping with you. All right, we'll come back up here to our pivot area. Nice rotation there off of the 27 area. And nice, would be a good exit strategy if you did happen to stay long up here. And like I said, you need the market to go up for it to go down. They flushed it. They ran it up to the highs there and then completely ran it off right down to a quasi support level that we had. It was our green band. It was also, you could have used it as a level as well. But like I said, I like to take the more conservative approach to the levels. We do have a website, but as far as records are concerned, that's all dependent on you. I'm here to kind of show you what the opportunities are. Sometimes talk you through them, like I just did now. But at the end of the day, the goal of the education course is for you to be able to find trades on your own. And we show you multiple reasons to find trades on your own. Welcome to the room. And we could always chit chat about it if you want. Hitintelligence.com, if I'm not mistaken, is the website. All right, so nice little bounce off of that little trade there. Our number just came out. The wholesale number just was released about a minute ago. So we talked about getting out of your trades against our pivot there. And hopefully you were able to, if you got long there, that's where your exit strategy was. And now we're just kind of flat again. Let's try to see what... major averages closed near the flat line on Tuesday as stocks remained yesterday. As stocks remained range bound near the record highs. Not much change overnight, with the Dow and S&P futures holding steady, as the contracts linked to the Nasdaq inching up by 0.1%. As mentioned yesterday, some traders are staying on the sidelines before the latest inflation figures on Thursday to gauge whether higher price pressures are temporary as the economy rebounds from a coronavirus pandemic. Others have plunged headfirst into the wild world of meme stocks. Cleaver Health has become the latest target from Reddit, the Reddit army. Cleaver Health. Clover Health. CLOV, in case you are into that craziness, as the latest on the Reddit army, whose sentiment is rapidly expanding to those looking for some outsized gains. The stock skyrocketed 96% to $22 on Tuesday and is up another 18% pre-market this morning. Those looking at some quick cash also jumped into Wendy's, which rose another 5% overnight following yesterday's 25% advance. And the latter move was notable as Wendy's has relatively low short interest. And there's no squeezing. So this could be like a regular and is an institutional favorite compared to AMC, Blue, BlackBerry, and GameStop. So who are they trying to hurt? All right, nice rotation there against our pivot. If you were maybe a little aggressive, we suggested getting out of longs. Maybe it was a little shorting opportunity there if you were a little aggressive there. Again, it all depends how aggressive you are as a trader. If you wanted to play the range game here a little bit, they had a reason for it. It was our pivot, at least off of a low. First rotation back. So, I mean, we do have reasons to trade, and we explain those reasons to you, and then it's up to you as a trader if you are willing or wanting or needing to take those other opportunities. That's all an independent thing compared to me telling you this is exactly what you're supposed to do, because that's not the case here. It's different than 1999. It's different than 2008. The number of players today and the amount of capital today is massive compared to what we saw back when it was mostly professionals, said one online broker, pioneer, option legend, whatever, Tom Snuff. What you're seeing is an entire generation become engaged. So instead of waiting until they're 50 or 60, they're trying to figure out what the markets are all about, and they're doing it when they're 22 and 23. This is a generational move. Okay. Yeah, okay. Okay. Trading a meme stock is not a way to trade stocks. I hate to tell this guy, but let's not even go there. President Biden is looking into new coalition into infrastructure bill. That talks with key Republican senators collapsed yesterday. He also departed today for his first trip abroad since taking office. The 8-day mission will seek to strengthen transatlantic ties, including G7. So I think that was one of the reasons the market kind of tanked yesterday afternoon, because they kind of broke off talks with the Republicans. But as you can see, they came right back up. No problem. Absolutely. We can definitely take this to another level if you want to discuss it and see if we can help you out at all. I mean, that's what we're doing here. We're trying to make traders out of individuals who've never traded before, or we can add to people who have traded and add some more opportunities to our arsenal. That's what we're trying to do here. The website is pitintelligence.com. PIT, P-I-T. Let's see. Do I have any suggestions on how to prepare mentally, emotionally, pre-market Do you have any ritual or know any good ones? Well, I mean, what we try to do here is we have our levels, right? And we never know what the markets are going to do. I'm laughing because somebody wrote in drink. um, we never know what the markets are going to do. And so my one constant that I always suggest to people is to don't come in with any preconceived notion of where the markets are going. That way it keeps you out of trouble of having some, idea that the market's going to rally or break right from the get-go. So my first suggestion is before the market opens up, if it's up a lot, down a lot, moving around crazy, just take it all in. Take every day in. As sometimes you expect a busy day, which is good. Okay, sometimes it's going to get busy, but you have to be prepared for it and adjust your stops accordingly. Like when we know it's going to be really, really busy, maybe your stops have to be 4 points, something like that, 5 points, depending on the volatility. Lately, because the markets have kind of been range bound and very flatlined, we're 2 to 3 point stops. So one way of gauging, okay, how busy you're going to be is adjusting your stops accordingly to what the market conditions are. And that could be sometimes derived before the market when you see what it did overnight. If there was some news that's hitting the market or the market's reacting to, when it was reacting last year to the pandemic and what was going on then. So that's one thing that I would do. But really give yourself a game plan like we have here with our levels, and then see what happens around them and just trade those and try to take, don't try to guess which way markets are going. Try to get in at a level and then try to take out as much out of it as possible. Like we suggested this 27 area here, where if you got multiple contracts, you can scale out of some and then keep a couple or one to try to maximize profits on the upside. So, but really, when I would get in the pit every morning, I would not have any preconceived notion as to what was going to happen. And I just traded the opportunities when it was presented to me. The hard part in trading, I think, is to wait for the opportunities to present themselves. A lot of people feel that they have to start trading as soon as the market opens up and keep themselves involved in the market. But because of the way things have been trading online and electronically, and since that's all you're going to get, it's not really advantageous, I think, to just completely immerse yourself in the market at all moments and times and have some kind of position. It's almost impossible to trade that way, only because of the nature of the trade. You don't have any feel like maybe you did on the floor, but definitely you don't have any feel on the screen as those numbers are flickering back and forth. So, pick your spots, be patient, keep your stops in place, and by the end of the day, if you eked out a profit and you eke out a profit every single day, you'd be surprised how that adds up at the end of the week. It doesn't have to be a big profit, but if it's a little profit, and if you have a really good day, a bigger profit, by the end of the week, things do add up nicely. Because each day is not really indicative of, how you're going to do. So I don't know if that helped, but. Oh, well, bonds kind of broke here a little bit. We didn't really react to the rally or the break. I'm just kind of hanging. All right. It could be one of the last major bipartisan bills of 2021. We're only in June, but the Senate got it over the line. Late Tuesday, the chamber approved the U.S. Innovation and Competition Act, a $250 billion package aimed at challenging China's technology ambitions. While the bill passed 68 to 32 in the Senate, it still needs approval in the House, which has been weighing some different approaches, but is still likely to see wide support. The measure is one of the biggest government interventions in industrial policy in decades, which trounced traditional party differences over economic policy. About 190 will be directed to U.S. technology and research to better compete globally, including money for cutting-edge science and our AI via National Science Foundation. Another $54 billion would increase U.S. production and research into the semiconductor and telecom equipment, as well as design and manufacturing initiatives. And the Commerce Department will get $10 billion in funding to generate regional technology hubs for R&D, and will be able to match financial incentives offered by states and government for chip makers to expand to construct new factories. All right. Yeah, at 7:30, there's usually some on numbers that are released before the market opens. The market opens up at 8:30 Chicago time. At 7:30 Chicago time, there's a slew of numbers that are released in the market, pre-market. So unemployment, there's a whole bunch of numbers that are released at 7:30, and that's why you get some movement there at 7:30. There's a lot of numbers that are released at 7:30 that affect the market, like the CPI number tomorrow. That's going to be released at 7:30 before we open up, including jobless claims. Usually the unemployment numbers released at 7:30. So yeah, if you're trying to keep sane, keep some sanity in yourself, I would definitely not trade the less. There's definitely less volume in those at those times, as the traders basically start coming in there at 8:30. So definitely wait till it's very, very thin. That's why we don't really like to trade at night. The markets are very thin at the night and at night as well, and definitely before the cash opens at 8:30. So yes, I would definitely stay out of it until the cash open. Again, the volume is just not there. You can get some crazy moves one way and the other, and the market's really there's nothing to hold it back, and there's no reason why you should get involved, because if somebody wants to buy 1,000 or sell 1,000, and it does happen, that's why you get the wild gyrations back and forth with no volume. So it's not worth the aggravation. At least we can get run over when there's some volume. At least if we're going to get run over, at least we have a chance to get in and out. But if there's no volume, sometimes you can't even get out fast enough because of the volatility in the market, or lack of sometimes. Can we repeat the levels in the chat one more time for us? There they are. Thank you, Mark. By the way, Mark, did you find your headset? Okay. Don, are you going to be around tomorrow? Do you think maybe you can jump in the morning for me with your co-pilot? Okay. Good. I'll be here in the morning. I have some. I think I'm leaving my stuff that I got to get done for Thursdays these days during the summer, so that I can maybe take a day since things are a little slower. But I'll be here in the morning, and maybe the Tuesday use can jump in and take care. I have to do some stuff with my wife tomorrow, and I've been putting it off, but I figure, all right, good, fantastic. So I'll be here in the morning, give you the levels, get you guys set up, and then you guys can take over the controls. And tomorrow's number is going to be at 7:30, so before we open up, and there's really nothing else after that. So, all right. Hopefully, Don, your co-pilot will be around tomorrow. All right, we're just kind of bouncing back and forth here. We're support down at the 24. We got down to 26-ish. The 25.75 was our settlement price. So if you were using that, maybe you got in. I don't know. And this is what happened yesterday, where they kind of knocked us down, the market down a little bit pre-market. Thousands of websites, including many websites, went dark nearly for an hour on Tuesday morning, beginning at 5 o'clock Chicago time. The issue stemmed from a configuration problem at Fastly, a content delivery network operator that speeds uploading and streaming times for web pages. Content is basically stored across a large number of servers that are located closer to end users, cutting the time it takes for data to reach them via cloud networks. On May 12th, we began a software development that introduced a bug that could be triggered by specific customer configuration under specific circumstances, they said. Early June 8th, a customer pushed a valid configuration change that included the specific circumstances that triggered the bug, which caused 85% of our networks to return errors. We detected the disruption within 1 minute, then identified and isolated the cause and disabled the configuration within 45 minutes. 95% of our network is operating normally. The investors was impressed with Fastly's turnaround time to address the problem, sending the shares of the company up 11% to $56 a share on Tuesday, following earlier losses after the outage. That's good. Actually, it does its job, right? It's good to know. All right, we are just kind of range bound here, unfortunately or fortunately, I don't know. Kind of just picking your spots. Like I said, sometimes the spots are more pickable. They're out there. Like I said, we average 4 or 5 trades, uh, and today, not so much. Maybe if you were a little aggressive, there were a couple trades, but again, patience is important. All right, we are just kind of hanging, staying below our blue band if you are a blue bander. All right, we're coming up here against our blue band. If you are going to trade that, it's up to you. And I got no feel for this right now, so I'm just kind of just hanging and waiting. We're really not going anywhere fast here, so All right. Any questions? Feel free to ask them in the chat box there. I know it's kind of um, it's tough when there's not much going on and the market kind of slows down. And, it is what it is. But like I said, we have to pick our spots. We have to be patient and wait for the opportunities to present themselves. That's the only thing we can do as traders. I wish we could give you trades to trade, but market just kind of range bound. It's very difficult. We did have the settlement price opportunity there. It got down to 26. Like I said earlier, the settlement price was down at 575. If you were maybe a little aggressive, you were looking for that trade. And again, it depends on how you scaled in around it, if you did it all. 24 was our support level that we had, that we still have. And we did not get down to that yet. So we're just kind of floating back up here to our pivot and kind of staying pretty much very neutral. And, neutral is good if you're not trading. But we want to trade, so that's the only problem. It's not a problem. It is what it is. We just have to be patient and wait. All right, we're just kind of doing nothing much here. So patience is important. All right, just kind of hanging up here, kind of going nowhere fast. They really pull the plug. Patience is important. Kind of a same old routine that I'm saying here. Unfortunately, not much has really changed. It happens sometimes, right there, Don? That's a good surprise. Yeah, well, take it. It could easily have gone the other way. So that's how I look at it. Once in a while, it goes your way. There's nothing wrong with that. All right, and then we are just kind of hanging here. Get back here in a little bit, see what happens. Yeah, I know. I know. I know. It did pop back really fast, right? He came in just in time, or wasn't around just in time. One or the other. All right, as we can see, it's kind of quieted down here quite a bit. So our expectations have to also be dampened here a little bit, and just be a little bit patient. Not much is really going on. And again, we got resistance up at the 41 area. It's hanging right around our pivot here at 33. So really not giving us much of anything to trade. Patience is important. And we'll look for downside support is still at 24. So really, unless we break out of this little range that we're in, it's going to be kind of a quiet day. So let's be patient as well, because that's what you have to do as traders to be profitable. Wait for the opportunities to present themselves and then take advantage of it when it's there. Otherwise, let's be patient. I said we average about 4 to 5 trades in the course of a day. So any day average. So today we might not get there, but there'll be other days where we'll trade like 10 contracts or more. Who knows, right? Stuff happens that way. All right, get back in a bit.
Hey, a couple quick programming notes and shout outs. If anybody that's in attendance today as a guest has any questions about Sol's trading education, let us know back in chat and we'll set up a private consultation. Make sure you sign up for Sol's Friends and Family. I've got a discounted monthly membership for you. Take a moment to sign up. Hey, Rick R., let me know if you have any questions. Julio, let me know. Glenn T., Jeffrey. Hey, Dean, how are you? Chad B., how are you? Hey, Chad, what was the email that you had wanted us to communicate with?